Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today we are going to talk about what's currently driving the market. What are the key events that then we also look at? So from the price action side, there's quite a number of things that get indices. So before I make any progress, I would like to begin with a mic test. So if you can hear me clearly, can you type hi on the live comment section? And this will confirm that everything is working just fine. So hello, Traps, Kid, Maureen, Luca, thank you guys for joining. I appreciate your feedback. So let's get going right away. First, from the calendar, we expecting questions announced morning, so we'll be trying to understand that before we look at what to look forward to. So we have had a lot of low impact news ranging from building consent improved to 1, and of retail sales Japan, which weakened to 4.2% from a previous reading. Apologies for that. I lost my connection for a second there, but I'm hoping I'm back. So kindly confirm. Yeah, I've just seen that. Clearly, I was not very clear, but I'm hoping I'm back by now. So someone confirm. All right. So back to the economic calendar, trying to understand what has been happening since this morning. I'm hoping that the voice is clear now. Awesome. Thank you guys for the responses and for the feedback. Sometimes there can be technical issues with internet connectivity. So we go on nevertheless. So as I'd mentioned, the ANZ Business Confidence Survey showed an improvement to 30.8 from a previous reading of 23.4 in New Zealand. Building approvals improved by 7.5% in Australia compared to the previous contraction of 4%. Private capital expenditure weakened to 0.00 by 0.6% from the previous reading of 3.4%. Then private sector credit slowed down to 0.3% from the previous increase of 0.5%. So the only major news this morning was Chinese manufacturing PMI, which slowed down slightly to 49.4 from the previous reading of 49.5. So non-manufacturing PMI also weakened slightly to 50.2 from a previous reading of 50.6, which basically implies that the Chinese economy is weakening or slowing down. So consumer confidence in Japan basically improved to 36.1. This is a good number compared to the previous reading of 35.7. Housing starts were down negative 6.3%. It's a slight improvement from the previous contraction of negative 6.8%. And of course, we had German retail sales coming higher than expected at 1.1% from a previous contraction of negative 0.8%. So retail sales in Switzerland were also contracted to negative 0.1%, from a previous reading of negative 1.2%. French consumer spending down 0.9% compared to the previous reading of 0.0%. French preliminary CPI came in at negative 0.2%, showing some form of disinflation compared to the previous increase of 0.1%. So clearly, it's an overall indication of weaknesses in the Asian economies as well as the European economies. And now, as we go ahead with the day, there will be quite a number of important data points to focus on. So the number one data that I would put my focus on will be the core CPI flash estimate for the Eurozone, and of course the CPI flash estimate for the same. So CPI flash estimate for the Eurozone is expected to drop to 2.7% from the previous reading of 2.9%, whereas core is expected to drop from 4.2% down to 3.9%. So if this happens to be the case and inflation is weakening as expected, then there will be increased bets that the ECB may no longer hike rates. And as a result of that, we could be seeing a much weaker euro in the markets. However, if the number is higher, especially higher than the previous number, then in that case, we would be considering an aggressive European Central Bank. And as a result, we could be seeing a much stronger euro. So also very important for the day is the OPEC JMMC meetings. This is a short for oil producing and exporting countries, joint ministerial meetings committee. These should be happening all day. So normally these meetings are not aired, but after they happen, we normally see some of the participants leaking information to the media, and this has the overall impact of influencing the oil prices. So the overall expectation is that Russia and Saudi Arabia may convince other members of the OPEC to extend their oil output cuts to the first quarter of next year. And as a result of this, we could be seeing much higher oil prices because of the limited supply. So this has not been agreed yet, and we are hoping and expecting that it will be agreed on this meeting. So for the TPM, we'll be having Canadian GDP data, which is expected to come at 0.0. Then we'll be having speech from ECB President Lagarde, and this will be happening still at 4:30 p.m. So she's due to deliver opening remarks at the ECB Forum on Banking Supervision in Frankfurt. And this could have some impact in the euro as traders focus on getting hints about monetary policy. So the most important in the US, which is the Fed's favorite measure of inflation, and we're expecting that this is going to bring the much needed volatility in the markets, which could create some trading opportunities for us. So on month-over-month, we are expecting that the print 0.2% in the month of November. Then we also be looking at the price index year over year, which previously read job rest. So in this case, we will 1840K, and now we are so today has been quite challenging with my connectivity, but hopefully I'll get to deliver some good content as we approach the end of the presentation. So let's see if we can get some more insights from the economic calendar. So, hello, Rich Studios. We are doing very well as we approach the end of the year. So there's a good question from Alex. Gold did a good buy last week. What should we expect? Please advise. All right, so let's get to the technical side of this. So clearly, I think the most bullish asset for the day seems to be Brent oil, which already broke this pattern here. So from the 1 hour chart, this is how it looks like. So if you zoom out, you'll notice that the market was trapped in this triangle. Yesterday, there was a sudden drop, which was rejected immediately. The market got back to the trend line. And eventually, this morning, we had a breakout and the market price is accelerating higher. So now we are almost at the top of the pattern, and I'm expecting to see some further upside, which may coincide with the previous support levels. So notice how this area was a support, and also this sequence of areas here. So I expect this area to be a nice target for today. And as you can see, price is rapidly moving towards that area. So there's still more upside momentum for Brent oil towards $84.466 per barrel. So as for gold, what we are seeing is some form of consolidation after we got towards the upper side. So we had this channel that was holding for quite a number of weeks. Then the market broke towards the upper side, and this was on Tuesday. Wednesday, we had a break, and then since then, what we are seeing here is a consolidation. So for anyone who is focusing their energy on gold today, here is the consolidation to watch. So that trend line, and then the one on the lower side is right here. So this is what we will be monitoring today. So eventually, we expect to see some form of breakout, especially potentially getting this during the PCE price index data. So in this case, a breakout would mean that we have a direction. Of course, if it's a clean break upside, we go for buy positions. And of course, if there's a clean break downside, then we technically go for short selling positions. So there's a good likelihood that if the PCE price index comes in weaker than expected, then that could be weakening for the dollar, and it could lead to a good acceleration of price higher for gold traders. So on the other hand, if PCE price index comes in stronger than expected, then in that case, it would lead to a much stronger dollar because there will be bets that the Fed may continue holding rates higher for longer. So that's one of the interpretations in the market right now. Then on the equities side, or what we call the equity indices, looking at the NASDAQ, we are still within this form of consolidation. So what we're experiencing here is a market that is consistently forming higher highs as well as higher lows. But then we can say there was a huge challenge yesterday where the market was expected to continue pushing higher and getting closer to the upper trend line. But then you can see the big gap left, meaning that the market is losing momentum. So within a very short period yesterday, the market was able to eliminate the gains it had made for the day. And what we saw towards the end of the day was basically a candlestick that signifies a rejection of higher prices. So you can see the candlestick with a red small body and a long tail towards the upper side, indicating that higher prices were rejected. And now we are seeing the imprints of potential bears entering this market. So after this big sell-off on 2 consecutive 4 candlesticks, if you look at the 1 hour candlesticks, it was a big sell-off, eliminating all the gains we had made for the day. Then it means that there is a likelihood that the market could continue weakening for the day. So of course, we will be having a lot of reaction, especially after the PC price data. So in this case, it makes more sense to observe the current price action in trying to understand what might happen later. So clearly, we can see that since midnight, we haven't had much activity. So it makes more sense to be patient and observe this area or zone to see what direction the market breaks next. But for now, it seems like the market is showing some signs of weakness after the strong bullish momentum yesterday did not last for long, and the gains were eliminated towards the end of the day. So perhaps some further weakness will be playing out in the market today. So it's a similar thing for the US 30, except that this one is pretty strong and has remained in pattern for quite a period now. So if I zoom these, you'll notice that there has been a consistent and very healthy trend line here, where every time the market got to that area, eventually ended up moving back downwards. So we are currently closer to the upper trend line than the lower trend line. And what this means is that we can expect the market to at least move further back downwards as we continue playing out this pattern. So for the Dow Jones, there's a likelihood we could be seeing the market pulling back downwards towards the lower trend line. Of course, we move on to the S&P 500, which is also experiencing similar features. Just a moment. So yesterday we got some good volatility after the market being almost dead for quite a while, where the market was originally moving upwards in a very strong trajectory, but then the trend started weakening and now we have this. So it shows a market that is still forming higher highs, but not at the same rate as previously thought. And now what we have here is some form of neckline that the market is attempting to break. So in this case, we can already see the S&P 500 bouncing from this area, moving higher, but then the area to watch is a potential break of this trend line. So if the market was to break this trend line, and this is along the confines of around 4,551, then perhaps you could find some short selling opportunities. So notice how yesterday there was acceleration of price in the earlier parts of the day. Then in the afternoon through to the evening, we had this sell-off erasing all the gains. And then from the daily chart, this is how it looks like. So a candlestick that attempted to go up, failed, and closed with a small bearish body, indicating a potential rejection of higher prices and an entry of sellers in this market. So now today, the price action is not very promising. What we are seeing is some form of range, and this range could be the key indicator for the direction of the SP 500 for the rest of the day. So you can monitor it on a smaller time frame, such as the 15 minutes chart, and try to understand the direction of the break. So we haven't had a break yet, but then if there's a break, it still makes more sense to observe the yellow area around 45.51 to see if there's a clean break and identify an opportunity after that. So for the French 40 index, we had this breakout happening earlier in the week. It was not sustained, so the market started reversing. Yesterday kept going higher, and then it stabilized around this area. So there's still evidence of weakness in this market, indicating that there is that potential that the market eventually reverses from one of these price levels. So in this case, if you monitor a smaller time frame, you'll notice that also with the French 40 index, some form of pattern or consolidation is forming here, and we should be seeing a breakout within a short period. And the breakout could determine the direction of our trades. And it also seems to be a similar story with the Euro 50 cash index. So after the breakout here, the market pulled back and now is retesting this resistance again. And from what we can observe here, and this on the 1 hour chart, is that the market is really struggling at any levels around this area. So it's attempting to break, but every time it gets here, you can see the long upper tails. In this case, there was also some long lower tails, But based on these resistance and then the number of times the market has attempted to break here, then there's that potential that the market could potentially continue moving further back downwards. So for the UK or the FTSE 100 index, what we are seeing is attempts to push prices lower. So from here, the market basically just dropped on Tuesday and then made a recovery and then ended here, which was a day lower. Opened, shot down, and then went up, down, and then ended here. Then today opened, rallied again, and then made a very sharp drop to this area. And from what we can observe with these tails is that there seems to be some form of a strong rejection of lower prices, but then also consistent attempts to breach this area here. So from what we are seeing, if the last 2 days are anything to go by, then we should be seeing some price acceleration higher. So notice what happened in the last 2 days. Price, after failing to breach that area, made a bullish momentum. The following day, it made a similar momentum, but in this case, a little bit shorter. And in this case, if the market, let's say, was to close around this area, then perhaps we should be seeing an acceleration back to this area. So it's almost 3 consecutive days where we are getting similar price action from the UK 100 index, or what we call the FTSE 100 index. So on the dollar front, we are seeing the dollar index continue to strengthen. So yesterday, it was quite bullish for the dollar index and it managed to close with a slight gain. Then today, after attempting to go down, we are seeing an acceleration of the dollar index price. And this basically means that with a strong dollar, we continue seeing a strong dollar across the majors. So for the USD JPY currency pair, we have had quite a big sell-off, and some form of recovery for the dollar is important. So it shows that there's some form of resistance here, and the market is currently failing to break above this area. Also, we have seen a consistently strong Japanese yen. So in this case, it makes more sense to focus on this price action level of 147.236 as a potential make or break point. So once the market gets here and crosses higher, then the target now extends to yesterday's high. But then if the market has not breached 147.236, then the bearish sentiment remains. So for pound USD, after the strong bullish momentum, what we are seeing here is some form of consolidation. Then all we have to do is to monitor the break. So the consolidation is taking this shape here. So I would say this area. Of course, within the last 2 days, yesterday and today, at some point we will be seeing some form of breakout. And if the dollar persists in its strength, then there will be a breach of this area, and the price could drop further to around 1.26363, which was the previous target on the upside, and now it becomes also a target on the downside. So for Euro USD, we have already seen this breach happening. So after the strong rally towards the upper side, we found resistance here. And now the euro is continuously losing to the dollar, especially after the list of weak economic news that we just saw in the economic calendar. So in this case, there's a good likelihood we will be seeing some further downside happening in Euro USD prices. And of course, the new target now becomes this particular trend line. So I'll be trying to understand the price action level. So around this area becomes the new target. Also notice those are previous resistance. So we still have more room for downside in Euro USD, down to 1.08883. So this seems like a very reasonable target for any Euro USD trader out there. So for USD CAD, we are seeing the dollar bouncing from here. And from this bounce, there's a good likelihood we will be seeing the reversal happening shortly, mainly as a result of the strength in oil prices. So remember, the Canadian dollar is positively correlated with the oil prices. So if oil prices are strengthening, then the Canadian dollar tends to strengthen. So I expect that around this area between the current price level and yesterday's high, so this is yesterday's high, this is the current price level, we should be seeing some form of reversal as oil prices continue to strengthen. So remember, we already saw the oil prices here making a break, and we expect some further upside to 84.466. So in this case, if we happen to see the Canadian dollar strengthening, there's a likelihood it will happen within the yellow zone, which would present opportunities to go short on this pair. So for Asian pairs, majorly the Australian dollar, we are seeing some weakness coming in. So after the strong bullish momentum over the last couple of weeks, now we are beginning to see some weakness, and the first sign of weakness here seems to be the inability of the market to form higher highs as well as higher lows. So from these highs, followed by today's high, it's already a sign of weakness, and we could be seeing some further deceleration of price. And from this chart, what I'm seeing is some consistent trend line that has been holding as support. And now we observe this area to see if there's any signs of a breakout towards the lower side. So if there's a breakout here, then it would imply that there's an opportunity to go short. And of course, the immediate target becomes this area here, but then there's still room for more downside. So we could also be seeing the market retesting this area here. So I'm trying to identify the appropriate one where we have this resistance, previous support, and now the market headed back downwards to those areas. So as for Bitcoin, we enjoyed some good run to 38.396. But then since we got to that resistance, the pattern remains to be very strong. And what we are seeing is a downside momentum from the previous highs. And now we are on a downswing towards the lower trend line. So for New Zealand USD, which is similar to the Audi USD, what we are seeing is also a market that is now being unable to continue forming higher highs. And now we could be seeing a deceleration in price, perhaps all the way down towards the lower trend line, somewhere along the lines of 0.61288. So lastly, USD CHF. So we had a big bearish channel here. Market managed to break to the lower side, retest, and continue moving further downwards. But then since today we are seeing a strong dollar, then perhaps the market will be retesting this particular trend line, and of course yesterday's high. So there's a good likelihood we could be seeing the dollar regaining some ground against the Swiss franc and retesting the 0.87803 price level. So I'm seeing some good commentary in here. What is up with the tech, US Tech 100? So it seems like the markets are beginning to realize that things are completely overpriced, and investors who have been benefiting from the good bullish rally for the better part of the year, some of them are taking profits and heading out on the holidays as well as on Christmas. So in this case, as we approach the end of the year, remember, today is the 30th of November. This is when a majority of you guys are taking your holidays. You're looking at your calendar and seeing the number of unused leave days and combining them to take on a holiday. So at this point, we expect a lot of profit taking to be happening and the markets to start reversing or correcting for a while. So that is a reasonable expectation as we approach the end of the year. So the Nasdaq seems to be forming a double top on daily at 160.28, last seen in January 2022. For the last 7 days, nobody closed above the level. Yes, so for the Nasdaq, it's very close to its all-time high record. So if you go to the daily, you will notice that there was this previous high here. We have not hit that level yet, 16,768. So this was the highest price that we have ever seen on the Nasdaq, or what we call an all-time high. So it happened on November 23, 2021. So 2022 was basically a bear market, then 2023 recovery, and now what we are seeing is the market breaking above the previous high. And this is a high that we had seen earlier in the year. But then from the daily candlestick, you can see the rejection of higher prices. From the 4-hour candlestick, also some form of strong rejection. So that's why I have the idea that these are indicating weaknesses in the charts. And the areas to monitor include the lower trend line. So a potential break here towards the lower side would most probably lead the Nasdaq towards this particular trend line here. So the trend line is on the 1-hour chart, extending all the way back from the 16th of November. Then once we get to this trend line, we observe whether there is a bounce or a break. And I'm hoping or speculating that there will be a break towards the lower side as the market takes a step back. The strength of the euro is not very promising, even though the Central Bank of Europe, or the ECB, European Central Bank, has been saying that it has more room to keep tightening policy. Things are not looking so good. Remember, we still have the Russia-Ukraine war. Two European economies are still facing the highest inflation among the major economies. And at the same time, we are seeing weak manufacturing across board, especially in Germany, France, Italy, Spain. And with this weak manufacturing, it basically means a economy. So they don't have the wavelength to continue tightening policy. So there is a good likelihood that the euro will remain weak across board. So on the bonds side, the European bonds are not doing as well. So with a currency that has been weakening against the dollar, and now looking at bonds where there's higher yields coming from the UK, higher yields coming from the US, then we could be seeing a flight of capital from the European bonds to American as well as UK bonds. And this basically means a much weaker euro. Another good question, what's moving the markets? My feel is that we are done with the Feds and central banks action for now, till when macroeconomic factors change and warrant a pivot. So yes, this is quite true, but then a lot of these central banks have changed their stance to what we call data dependent. So right now, investors in the markets are reacting to the data that is coming in every day. And that's why for today, the most important news would be the first favorite inflation measure, which is the PCE price index, or personal consumption expenditures price index, which is a more accurate measure of inflation. And in this case, if it happens to drop further than expected, then there will be increased bets that the Fed is done with rate hikes, and we could be seeing the dollar weakening further, but also we could be seeing equities flying higher. So on stocks, what's your take on Warren Buffett staking cash? Isn't it testament of fraud in the markets? Prices are nearing all-time highs, as was last year where Fed and Warren agreed of fraud in the markets. So yes, that's true. So when prices are approaching all-time highs, this is when Warren Buffett is taking profits. He already took some good profits in 2021 and staked a lot of that in bonds because he knew that interest rates were rising. In 2022, he made some good cash on these bonds, but then he may not continue holding on to this cash, especially if the stock market was to do a correction. So in this case, as Warren Buffett always says, you hold onto a huge position of cash reserves whenever the stock market is going down, so that you can do what you call bargain hunting. So in this case, Warren Buffett is watching closely or keenly for signs of weakness in the market. And once prices fall, that's when he will have excessive cash more than anyone else in buying good deals. And buying good deals, according to him, is buying good businesses at low valuations or at low prices. So it basically shows across board that there are signs of cracks and that at some point the stock market is expected to form some level of correction, especially with the weakening currently happening in the housing market in the US, the weakening of the consumer, and of course the weakness of businesses. So as we approach the rest of the day, I think the key focus for the day should be on US equity indices potentially correcting, gold prices potentially making a breakout out of this triangle, and of course, Brent oil prices making a run for it. So we could be seeing some further upside momentum coming from Brent or even some form of reversal. So already in the current hour, it's showing a rejection of higher prices. So as the OPEC Plus meetings continue, we could be seeing some good volatility coming from this. So that's it for the day. Thank you very much, guys. And I hope to see you on the next session.